Good weekend, all. Ira Epstein of Linn Associates with your financial market wrap-up. And this wrap-up is for the weekend that was. We're now on Sunday, August 1st. You know, if you count Sunday part of it, fine. But it's really the beginning of the new week, right? So let's look back at the markets and get a feel for what they did, because I didn't do the updates on Saturday. So as we take a look at a monthly area chart of the S&P 500, we can come back and get to the close on July 30th. Another new all-time high close for a monthly basis. So it's just up and away, hasn't really backed off at all there. When we come to a weekly chart, and that's what we look at on the weekend edition, just the weekly picture. You finished off, and let me get back here also to the 30th. You were down for the week for 0.31%, not quite a third of a point, 13.5 points, and now you're starting to move back up, making that up, and you've got a gain going again. Why is that? Well, we're looking at the COVID-19 and the spread, which is big, but it's only in the United States. The word only is not fair. It's mostly, like 95, 98% they're saying. But of those that end up in the hospital haven't been vaccinated. Can we that have been vaccinated get COVID-19? Yes. Does it typically come out bad? No. So the push is on to get everybody to get that. In states where you're not seeing a lot of people get it, the hospitals are starting to get overwhelmed. And the reason the market's not down on that news, it's a different portion of the population. It's not everything. And as bad as we might have to put masks on again, it's not going to shut down the stores, the retail operations, and so on. That's certainly how it looks at this point. When you look at a weekly bar chart, you've been climbing that wall of worry where people continue to say this can't go on, and it goes on. Higher lows, higher highs. Now, if you don't know what a swing line is, you should take my charting course. If you go to our website, www.iraepstein.com, I explain this, moving averages, Bollinger Bands, window envelopes, and slow stochastics in detail, and I show you how to put them together as a trading pattern. The course is inexpensive, $249. It's got about 50 hours of video. I mean, it's quite a bit that you're going to, rather 50 videos, not 50 hours, 50 videos for you, each probably about 10, 12 minutes long. So it's quite a bit of information. You get my research with it, you get the charting software, the data to go back, see what I was doing back then, now, and then in the morning when I put out the morning subscriber videos, you get to see how to tie it all together. Suffice to say, the trend is still up and bullish. The market is over the 18-week average of closes in red. Whenever you're over that number, I say the bias is up. It's a filter on other indicators. Bias up, trend up. One of the objectives, the upper Bollinger Band, 44.3560. You can also see that you didn't hit it this week. You just missed it by about 6 points, and you haven't hit it since back here in April. So that's the target. That's a live target in the market right now. When you look at the slow stochastics, they're embedded. All systems are go for higher prices still, according to the way that I teach charting. In the NASDAQ, it's identical. The slow stochastics are embedded. Embedded means you don't have both numbers under 80 just bouncing around. They get over 80, they go sideways, and until it's lost with the red line, and that'll be the one that closes under 79 first, when it gets lost, that would be it. When that happens, you often get a price correction, just the way you did right here, and then you're trying to take advantage of it. Another thing that I pointed out on weekly and the daily charts, you're not staying under these 18-day weekly average of closes very long. Each time you've gotten there, when you look back, it's been a buying opportunity. That has not changed. In the Dow, the slow stochastic is embedded. The market's in a tight trading range, not quite as bullish as some of the others, but still in the bull camp because of the embedded reading. The objective, if it can make a run to it, it's 35,260. You don't want to see it lose that reading. And where's the weakest sister of all this? The Russell. It's still very much in a bearish phase. lower highs, lower lows, unlike the other charts, and under that 18-week moving average of closes. So this is still in the bear phase. To negate this phase, you have to take out this high way up here, which is 2338.60 at this point in time. And that's quite a ways off from where you're at 2234.60. So quite a ways off. In the bond market, this is called, and I termed this a long time ago, called the Gorilla Glue trade. And I admit, I was watching Kramer with his names, and then I realized I can give that a name. He's good. I think I'm pretty good as a chartist. It's when you basically lock in on that upper Bollinger Band and you don't back away much. Often, it's accompanied by an embedded reading. You're not getting that right now. So I have an overbought market that's in an uptrend when you're that close to the Bollinger Band, the way that I teach charting. As much as it can keep going higher, I don't teach to buy against the Bollinger Band ever. Same thing in the 10-year notes. You've got too much resistance between that upper Bollinger Band and the 100-day average of closes. No question that you've got the Gorilla Glue trade. You're still very much in an uptrend. There's no sign to be bearish, but when you're that close to the Bollinger Band, if you buy over that band, you'll look back at it and say, why did I do that? In the dollar index, I saw that the open interest, the CFTC releases on Friday afternoons the traders, what they're doing with the traders' reports and who's long, who's short. Look at it that way. And we have one of the largest long positions that we've had recently. When you get crowded in a trade and it starts the other way, watch out because there's unwinding. You don't have a trend here. You have a higher high and a lower low in an overbought market. In the eurocurrency, the trend is down. Lower highs, lower lows, as you can see. It's the flip-flop of the dollar. The Canadian dollar is bouncing away from the Bollinger Band. It rode with that Gorilla Glue move here. Then you lost that embedded reading. Remember what I told you? You wait for it to close under 79. It happened to go that month right down, rather that week, right to that number, but that's often not the case. That ended the uptrend. You got to the lower band and you're getting a bounce. Very difficult market. I don't see the pros being too aggressive here because where are you going to put a stop? Well, it could be over that. Upper Bollinger Band's there, so if they're going to sell, they'll probably do it in the 8107 area with stops on a weekly basis. I would imagine just over 8138.5. That would be how I'd be reading the chart. Why bearish? Bias down, trend down, markets corrected in oversold condition. Japanese yen has been in an uptrend, higher lows, higher highs, and it's not been able to really mount any attack over that 18-week average of closes, momentum up, but the market's not in a buy mode. You have to be closing over that 18-week average to be in a buy mode, and you're not getting it. Bitcoin. This has been a contra rally. The bias is down. That's why I call it contra. Whenever the market's under that 18-week average, the bias, and that's how I rate what price are doing, is down. You could have a trend up on a swing line, but if the bias is down, the two wipe each other out. And you lost an embedded reading back here. When you lost it, the goal was the 18-week average of closes. You're knocking on the door of it right now. So, then I look at the Brent versus WTI crude. Well, you can see how the market's just sort of sitting back here. The differential of the two is in a bearish trend where the U.S. energy is catching up with the Brent pricing. In the Brent, you can see you've got higher lows, higher highs. Is the market embedded? Well, both numbers today are over 80, but we can't count that, so we got to go back to Friday. So last week they were both over 80. The week before they were not. You're not in an embedded state at all. You're just overbought. Then when you get to the WTI, you got a higher high, a lower low from this. I call that no trend at all. Gasoline is in an uptrend with higher lows, and yeah, that is a higher low, higher high with an embedded reading. On pullbacks, I think the pros will continue to buy this on a weekly basis until that red line closes under 79. So you put it all together, you have an interesting game. You can see that you're up a bit tonight in most of the stock indices. Who knows where we'll be in the morning. There will be a live webinar with me this coming Wednesday and that'll be held. I'll open the gates to the webinar. It's online through Zoom, and it'll open at 12:15. You can send me your questions well ahead of time. I prefer that so I can get the charts ready for you, and we just whip through everything 1, 2, 3. The chat room only lasts 15 to 20 minutes. I do not record it to put it out. An invite will be sent tomorrow to all of you. Look for it that are on my mailing list. If you're not on the mailing list, you got to go to our website at www.iraepstein.com and sign up for one of our free offers. That gets you onto the list. I'm Ira. You have a good evening, and I'll see you first thing in the morning in my morning subscriber video.